We're checking markets here at mid-morning, and well, what's happening in the corn market? We are slipping a bit. December contract holding unchanged at 484 3/4. We're right at that $5 level on the March contract, and then a 512 when you roll out to July. Those are all new crop contracts. Only one old crop still on the board, 461 3/4 on the September. Soybeans, well, we've got the August and September as part of the old crop. November is the new at 1242.5, up 3.5. We did have a flash sale announcement, unknown destinations, 4.6 million bushels. Wheat market, that's where the rally really started this week. September, though, down 8 cents, and we've lost the 7 handle as we trade 697 3/4. And hard red at 757 1/4. We're off 6 1/4. Quick look at spring wheat. Last check, we were lower across the board. Finally, cotton market up 68 points at 81.79. Our guest today is the owner of Blue Reef Agri Marketing, Chip Nellinger. All right, Chip, what are you watching here today?
Well, we saw before the break, Tony, all eyes are on the weather forecast here. It's been very, very hot, very dry in the western Corn Belt. It's even starting to dry out just a little bit here over in the east in spite of all the rain we had in June. So it is 100% a weather market, but I would tell you there's a lot of other things bubbling under the surface here. The drought in Europe, the tensions in Iran, the Russia-Ukraine war effectively closing the Black Sea. We've had recent, attacks on Saudi Arabian ships in the Red Sea. Crude oil is up over $5 a barrel. So it's a weather market plus, and there's a lot of things under the surface. Not many of them are bearish at this point. So the funds have kind of been in control here on the long side of the equation in the grain markets for the last couple of weeks.
Okay, and we're watching beans. I mean, you look at the 6-month, and we're not quite past the peaks we've had on corn, but you look at the 6-month for beans, and we pushed right past it, up above 12. Is there more room, more air above us here?
Well, there is. The funds are long in the bean market, but they're not to a extended maximum type of a position. And so, the old saying about the bean crop is made in August holds very, very true. There's a reason for that. We're about to turn the calendar to August. August weather is going to really dictate if there's more upside in the short run in beans or not. I think longer term, though, we've got China buying beans. We had that sale to unknown today, arguably could eventually see that switched over to Chinese origin. But demand is firing on all cylinders on the beans. Any type of little weather hiccup with hot, dry weather, particularly in the western Corn Belt for the month of August, there is plenty of upside left in the bean chart here.
Okay, you mentioned crude as well. Last check on crude, I had us, like you said, up over $5. See if we can find it here. WTI, as we trade this one at 92.36, up $5.50. So obviously that's a factor in here. What about the relative strength of the dollar? Is that something to keep in mind as well?
Well, it is. I think that's a little bit of a backseat right now. Certainly the dollar longer term is going to affect things. But with world stocks shrinking across the board, corn, beans, wheat, the dollar becomes a little bit less consequential when we have the supply and the world has a demand and an appetite for it. So the dollar certainly matters, but maybe less so right now, which is maybe good news for our grain markets.
Unless you're trading in the yen, and right now the dollar to the yen, 40-year highs there. Wow. Any final thoughts before we jump into a break?
Well, just get prepared, batten down the hatches for volatility in this grain market. We're coming into a weekend, a lot of uncertainty from Friday's close to Sunday night's reopen in the grain markets, and forecasts can and have changed. So expect a lot of volatility in the days and weeks ahead.
And we could see volatility over in the cattle market. Couple of reports coming out on Friday. We'll talk more about that in a moment. This is Market Day Report. Now, we've seen that volatility in the row crop side. I guess you could say we've seen kind of some volatility here in the cattle market. Yeah, we are higher. We're up $1.20 right now in the August contract, but let me show you what I'm talking about when I say the volatility, if you will. Look at the last month here in this live cattle market. We're down $21.65. That's nearly a 9% loss of value in live cattle. By the way, cash trade is still at a premium to this August contract. We're trading 230 to 232. How about feeders? Are they any better? Or is there, a little bit. We're just down 7%, $26.37 over the past month. We're 60 cents higher right now, $341.77. And to be an equal opportunity griller, here's the pork side. August hogs, we're up $4.15 over the past 30 days, though we're down 7 cents on the trade today. All right, making sense of it, owner, Blue Reef Agri Marketing, Chip Nellinger. That's, would you count that as volatility when we're losing nearly 10%?
You definitely would, Tony. Even today, I was on the phone with a customer involved in the feeder cattle market. We've seen $3-4 swings in the matter of 2 or 3 minutes earlier today in the feeder cattle. So massive amount of volatility. Big break here. Funds still have a pretty long position. Nothing's changed fundamentally. About the only thing that's changed is we're importing more beef, and that seemed to be what kind of stopped the market in its tracks. You mentioned the cattle on feed report tomorrow after the close. That could maybe refocus the market that we really still have very tight supplies. We haven't changed anything there fundamentally longer term, but yet the market is always subject to these sharp breaks that we've seen over the last 3 or 4 weeks.
All right, as part of that cattle on feed report, semi-annual inventory report, any thoughts here? Could we get a surprise?
Well, you can always get a surprise on that report, Tony. That's very hard to gauge pre-report because it's such a vast number. It's a big undertaking, but there always could be shocks on that. Again, I don't know, given the drought in the Western Plains, how we can expect that the herd is building. So if anything, I would say the shocks could be on the bullish side, especially since we've sold off hard over the last month. Final one here for you, Chip. If memory serves me, this is a survey-based approach to those numbers. Are we tied to the survey responses, if you will, and the fact that we're not going to get 100% participation? Yeah, that's an issue, and I think the USDA is well aware of that. Personally, this is my opinion only. They have built in statistically kind of a fudge factor, but we face that in the grains as well. The survey response rate is very low, and so they're working with a small sample size. I think they're aware of that. I don't know how to fix it, but it does become an issue in these survey-based USDA reports. All right. Great to see you. Thanks for playing. Chip Nellinger, Blue Reef Agri Marketing.